We mentioned the amended filing for SpaceX. Our Leslie Picker broke that on the air and joins us here at Post 9 with some additional details, maybe. Hey, LP.
Hey, Carl. Yeah, so that amended filing is expected to come after the market today. So in speaking with people familiar with the matter, it sounds like the company and its advisors have agreed on a fixed price ahead of the roadshow. This is different than the typical range that you would see and you go and meet with investors and market your deal at a range. In this case, this is pretty unique here. They're doing a fixed price, they've already said it, of $135 a share. They're going to offer 555.6 million shares for a total IPO size of $75 billion. I was curious kind of whether there was any significance to the $135 price or 555.6 million shares. It sounds like it was just the math that got you to a $75 billion offering, as simple as that. On a diluted valuation basis, a fully diluted valuation basis, this will be a $1.75 trillion company, and that assumes and includes the EchoStar deal as well as the Cursor deal, but it would not include the performance units that would hit for Elon Musk when there is a sizable presence on Mars, for example. And the details of that fixed price does confirm a Reuters report from last night. The fixed price kind of comes from a very broad and wide-ranging testing the waters process. So the bankers and the company have already gotten a lot of feedback, according to my sources, and so they felt comfortable at this level, didn't need a typical range. I also asked about anchor investors, because you see those typically with these big deals where you have long-onlys on the cover that comprise a certain proportion of the offering, which increases the scarcity even more. I'm told that won't be the case here. They have some long-onlys that they've been talking with, and there's implicit demand, but there's not going to be actual anchor investors on the cover when we see that amended filing, most likely tonight.
All right, so Leslie, what thought have they given to the retail market problem? Do they understand that whatever price they're picking could be radically different and probably possible that there'll be buyers with market orders that might come up to $400, $500. What do they have on the other side to make it so that they're not batched a la 1999 and the price opens at at 260?
Yeah.
What are they thinking about?
I asked that very question because it's so important here.
Right. What did they say?
They're looking to allocate 30% to retail, and they did admit this is a big wild card here because you can come out with a fixed price, you go through the marketing process, you get that feedback, but not until they kind of set those terms and start the roadshow will they get that feedback.
But is there something they can do where there's a quick release? If they see that it looks like that the public's paying market orders, they batch them together, and it's 400, is there any way that they can have something on the other side not to be like 1999?
Well, they have stuff to protect from the downside. I don't know if they have anything to protect from the upside.
Do they not know what happened?
But I do think that the retail component, the fact that it is 30%, is unique here. Usually it's much smaller, and retail becomes that marginal buyer on day one.
For them,
so
maybe they'll flip it.
Well, that's the question: is do they flip it?
I just don't want people to get hurt. I hope they understand that in 1999, orders were batched. Bad guys took the other side. They were all investigated. A lot of them were drummed out of the business because people realized they opened it really high, and then the brokers walked it all the way down, made a fortune against retail. Do they know that?
But is this the size of this deal is so much larger than anything that you're talking about? Well, does that matter?
No.
You don't think so?
No, because this is the biggest deal of all time.
No, I know, but my point is 30% to retail of a $75 billion raise is not an insignificant sum. The things you're talking about from 99 were tiny.
No, I'm talking about people who have never even opened an account, who don't know the difference between a limit order and a market order, who come in and don't realize there's no one on the other side of the trade because no one has stock, and the broker has to hope that the retail guy flips, which is the opposite of what they want. I don't think they've thought this through.
I guess the point David's making is that the retail base is much more mature and larger now, right? It's not like you get a flood of inexperienced trading coming in.
I think you will. I don't think that retail base covers nearly. This is a man who is the most revered businessman of our time, and a lot of people want a piece of it. And not just the people who are on the deal. I mean, they've got to think about who they're really. This is a real problem on the other side when this thing opens. We don't want this thing to double.
My understanding is that, and this is, bits and pieces here and there, but to comprise that 30%, it's not going to be, largely from the Robin Hoods of the world and the SoFi. They will represent a portion of it, but they're looking at, Chase Private Bank and Merrill Lynch, and they're looking at retail abroad in order to do so. It's a little bit different than.
But that's a small universe versus everyone, and so many people want to buy on the deal, and there's nothing for them other than a market order and a $400 price that's reached between 1 and 2 p.m.
Leslie, thanks.
We'll see.